Have the gold bulls taken command? We have Gary Wagner this Friday. He's up next. Gary, thanks so much for joining us.
Thank you. Thank you. My pleasure as always, and it's great to be with you. And what a week we had this week.
What a week indeed, Gary. Gold breaching the key psychological level of $1,300 on Thursday. The question now is, Gary, can this rally be sustained?
Well, I'll tell you something. When we saw the market move above 1288, and that was my key level, we certainly had the potential for this market to take off. And at this point, once it broke through 1300, the bulls are absolutely back in control of the current market scenario. And I do see this particular rally as absolutely sustainable.
So Gary, which factors do you think are really helping to support gold?
In terms of the factors that have led up to this most recent rally, as I mentioned on last week's show, I believe it's a coalescence of multiple factors, or as I described it last week, the perfect storm. Of course, we have the geopolitical uncertainty in Iraq, which I fear will probably get worse before it gets better. And a destabilization in the Middle East always is an impetus for safe haven buying in gold. Secondly, we had the FOMC meeting this week, in which, although they are on course in terms of their current tapering, they alluded to higher interest rates. And higher interest rates, of course, are a major inflationary factor. The other thing that we're noticing was the consumer price index was revised, upwardly revised, and we really see the potential for some real inflation on the horizon.
So Gary, which are the key levels you're now looking at for gold?
The key levels right now that we're looking at in terms of support and resistance, of course, we saw the breakout once the market broke above 1288, key support. Next level above that is that psychological century mark, or 1300, very, very important. And then right above that we have 1311, 1312. Those are my key levels of support. 1312 being important, but 1300 being absolutely critical to hold if we're going to see a sustained rally on a technical basis. In terms of resistance right now, currently pegging resistance roughly at 1341.
Now, Gary, before we get to your insert, let's get some of your thoughts on silver, which is also enjoying a nice rally here, trading over $20 as we're speaking. What do you see with the metal here?
We absolutely notice silver beginning to break out and really break above the narrowly defined trading range that we saw it in. Because really, when we saw gold move in recent rallies, we didn't really see silver follow suit. Now, we noticed something different last week when it broke above 1900, then again at 1920. And of course, this week's breakout to above $20 per ounce is exciting, because I really think there's some fire back into the marketplace itself.
All right, Gary, let's get to your insert now. What have you brought us this week?
In terms of today's insert, we're really going to look to connect the dots. We're going to talk about the different fundamental factors in the market and how they relate on a chart. In other words, how that can be interpreted and why we're looking at the possibility of this perfect storm.
Great, Gary. Thanks so much. Let's get to it.
On today's insert, obviously the topic of discussion is going to be this dramatic breakout that we witnessed. It began, of course, on Thursday after the market really broke hard, first above 1288 and then that psychological 1300. I'm going to try to cover a couple of targets that I believe we could see this market go to, and talk about the fundamental question, and that is, could we see a sustained rally, and what factors are involved in the sustained rally? As you know, I'm an adamant market technician. I look at charts all day. But realize that in my opinion, and the opinion of most chartists, that all we are looking at when we look at a chart is really the distillation of fundamental news, fundamental data, and how it comes out in terms of price action. In other words, it's absolutely fundamentals that move the market. So when we talk about a breakout on a technical basis and technical buying, it's still fundamentals that will typically move the market. the technicals are really going to be there for us, most importantly, to have entry and exit strategies, to have some sort of idea if fundamentals are driving the market higher, where in fact we could see the market move to. We're looking at a daily chart. This daily chart shows this dramatic price action as it breaks and breaks above. Here's 1280 right here, and we had the solid break, of course. If we look at key levels, I think one of the best ways to do that is an intraday chart. Let's go ahead and pull that up. Now, what I've done is I've pulled up a 120, a 2-hour Japanese average chart. We're really going to be looking at key levels that we find within the market and how we could effectively look at a potential breakout. The key level that I was looking for in terms of a breakout would be if the market, in fact, traded above 1286, 1284, 1287. It's really this band of what I believe was current resistance in the market. We can absolutely see that with this last top right in here. The other thing that we'll notice is that the characteristics, the overall characteristics of the market, although we've had these lows right in here, we pretty much had a flat bottom, finding support in these areas. But when we looked at the top of the market, really the best way to characterize that was a descending top in which we saw a series of highs that were moving lower. So we get these lower highs. Then when the market actually breaks through this support, because this was support right in this area, we saw the solid breakdown. Market moves to what? Just about 1240. And my sense was that we would probably see a rally. And in fact, we recommended to our subscribers, we got long at 1253. I gave them two strategies to exit the trade, and one of them was to put a price order in at 1283. So early this week, we actually exited our trade roughly in this area. And as this market came down, my sense was, first, I wanted to wait for the dust to settle with the FOMC meeting. And second, and most importantly, I really needed to see the market break above this key resistance level, because support and resistance are always part and parcel of the same thing. It's whether you're standing on the second floor looking down, first floor looking up, really determines whether it's support and resistance. It's that same price point, but it's a matter of the relationship to where the market's trading at. So whereas we had supportive action in this price point just prior to the break, once it broke support, then we had it become resistance. You could see it being a resistive area right here. Market comes back down. And interestingly enough, if we do a fib retracement of just this rally, let's go ahead and do that. I think we'll find that the conclusion of it was at a logical fib point. So traders, I've just done exactly that. All I've done is created a fib retracement from this low here to this high here, and lo and behold, 61% retracement. Take a look at where the low is coming in at. We had pretty much a perfect 61% retracement from this last rally and a dramatic breakout to the upside. Traders, I'll tell you, I think we are in store for a dramatic rise in terms of the price of gold. My first target in terms of where we think the market could go has to be 1341. And that's based as a 23% retracement. I also have areas above this. And what I am going to do for those members of Chart This after the show, it's absolutely free. You simply go to our website, thegoldforecast.com, click the Chart This after the show link, sign up. It allows you to see all of the bonus content that we have. What I'm going to be doing for today's show, since this insert was recorded on Thursday, I'm going to have an updated report, and this report is going to take into account the new action that we see not only this afternoon and evening, but into tomorrow, so that we are well informed as we go into the weekend to make our investment decisions for next week. Again, Fibonacci retracement as it pertains to support and resistance levels, and most importantly, how high can gold go at this point?
As always, Gary, thank you so much for compiling all that great information for us.
Thank you very much. And I want to wish all of our Chart This viewers a great weekend and prosperous investing and trading next week. We'll see you real soon. Bye-bye.
Absolutely. Wishing all of our viewers a fantastic weekend. The Kitco News team will be in New York at the start of next week covering CPM Group's Platinum Group metals, so watch out for that if you're interested in the Platinum and Palladium metals. In the meantime, you can email us any comments or questions and newsfeedback@kitco.com. Happy weekend.